If you're self-employed in the US freelancer, contractor, creator, business owner, there's a high chance you're legally overpaying taxes right now. And it's probably costing you thousands. Most self-employed people are walking past money that's already theirs. Let me show you exactly where. Doesn't matter if you work from home, from your car, from client locations, or from coffee shops. Doesn't matter if you're filing a 1099, running a Schedule C, operating an LLC, working as a sole proprietor, side hustling, or making irregular income. There's one category the IRS treats completely differently for people like us, and most of you have no idea it exists. By the end of this video, you'll know how self-employed people legally turn everyday expenses into tax shields, things you're already paying for. Things that are sitting in your bank statements right now. But first, you need to understand why most of you are doing this backwards. Because the way employees think about money will destroy you as a business owner. And that's where the bleeding starts. Here's what happens. You start making money, you mix personal and business spending, you guess at deductions, you're terrified of the IRS, so you only track income. But here's the problem. Employees are trained to track paychecks, business owners are supposed to track expenses. That's the entire game, and this is where the money leaks start. You're spending thousands every single month to operate your business, but you're treating it like personal spending. The IRS doesn't see it. Your CPA can't save what you don't show them. And at the end of the year, you pay taxes on money you never actually kept. Think about that. You're paying taxes on money you didn't keep. That's insane. Let's fix that right now. Even if you never work from home, your business still lives somewhere. It operates from somewhere. Your phone, business tool. Your internet, business expense. Your mileage, business deduction. Equipment, business asset. Partial rent or mortgage. Potentially deductible. Here's what wealthy self-employed people do. They categorize business usage, they document everything, they create a paper trail the IRS actually respects, and they recover thousands every single year. One freelance designer I know was paying $14,000 a year in taxes she didn't owe just because she wasn't categorizing properly. $14,000 every year gone. Now here's where it gets powerful. Real quick, comment what you do for a living. I want to see how many business owners are actually watching this. Drop it below. Seriously, take 2 seconds and comment. I'm building this content specifically for you. Now listen, most self-employed people think deductions only count if you have a dedicated office. That's not true. The IRS allows partial deductions based on business use percentage. You work hybrid? Covered. You drive to client sites? Mileage. You store equipment at home? That's space. You do admin work from your couch at night? That counts. Multi-location income earners qualify for this too. If you're a contractor working at different job sites, a driver picking up gigs, a consultant meeting clients everywhere, you still have business operations happening somewhere, and the IRS knows that. But most people miss the biggest category. Here's what the IRS allows that almost nobody claims. Partial home usage for business operations. That includes storage space for equipment, administrative workspace, planning and prep areas, client meeting spaces, inventory or supply storage, and vehicle tie-ins if you work mobile. Let me give you a real example. A contractor I know is running his business out of his garage, storing tools, doing paperwork, prepping jobs, planning estimates, but he never claimed it. He thought because he worked on job sites all day, his home didn't count. Wrong. His CPA restructured his documentation, same work, same space, same business. He recovered over $5,000 that year just by documenting what was already happening. Another example. A rideshare driver I consulted with had no idea she could claim a portion of her phone bill, her car washes, her trunk organizers, even the charger she kept plugged in at home for her work phone. She thought it was just mileage. When we rebuilt her tracking system, she saved $3,200 in taxes the following year. $3,200, and wait until you see the documentation part. Let me kill the fear right now. The IRS doesn't punish deductions, they punish sloppy tracking. Here's the difference. Sloppy sounds like this. Yeah, I use my home for business sometimes. That gets you audited. Smart sounds like this. Photos of your workspace. Receipts organized by month. Monthly logs showing business activity. Square footage calculations. Business use percentage with backup notes. Documentation timeline proving consistent use. Wealthy self-employed people don't scramble at tax season. They build systems in January. They track monthly. They photograph setups. They keep notes on what they use and when. The IRS loves this. Why? Because it's defensible, and when it's defensible, it's yours to keep. Here's what proper documentation looks like. You take a photo of your workspace on January 1st, you measure the square footage, let's say it's 150 square feet in a 1,500 square foot home, that's 10%. You know what you use it for. Client calls, invoice processing, proposal writing, equipment storage. Then every month you log your usage. Doesn't need to be complicated, a simple spreadsheet works. At the end of the year, your CPA has everything they need. 10% of your rent, 10% of your utilities, 10% of your internet, 10% of renters or homeowners insurance, all of it documented and defensible. That's how you turn a $1,200 monthly rent into a $1,400 annual deduction, legally. Quick question for you. Roughly how much do you spend monthly just to operate your business? Just ballpark. Comment the number. I'm genuinely curious. Because here's what most people don't realize. You can go back. If you've been self-employed and didn't claim this stuff properly, you can amend previous tax returns up to 3 years back. That means if you've been overpaying for 3 years, you can potentially recover tens of thousands. One client I worked with amended 2 years, recovered $18,000. $18,000, money she had already paid that came back to her. But it requires retroactive organization. You need to rebuild your expense trail, gather old bank statements, categorize spending, document business use, pull old receipts if you still have them. Credit card statements work too. Then file amended returns. Most CPAs won't tell you to do this because it's extra work for them. But if you're owed money, it's absolutely worth it. Here's the process. You download 12 months of bank statements. You go line by line, highlight every business expense, categorize it, office supplies, software subscriptions, mileage, meals with clients, equipment, phone bills, internet, percentage of rent, everything. Then you create a summary, total business expenses you missed. Send it to your CPA or a tax professional who specializes in amended returns. They file a 1040X. The IRS processes it, and you get a check. Now, here's what you need to understand. This isn't tax stuff. This is cash flow engineering. Employees get taxed first, then spend what's left. Self-employed people expense first, then get taxed on what remains. That difference is everything. Let me show you. Employee making $80,000 a year gets taxed on the full $80,000, pays roughly $15,000 to $20,000 in federal and state taxes, lives on what's left, $60,000 to $65,000. Self-employed person making $80,000 a year expenses $25,000 legitimately, business use of home, vehicle, equipment, software, phone, internet, supplies, all documented. Now they only get taxed on $55,000. They pay $8,000 to $12,000 in taxes. They keep $7,000 to $12,000 more every single year. Same income, totally different outcome, and that gap compounds every single year over 10 years. That's $70,000 to $120,000 in your pocket instead of the IRS's. That's a house down payment. That's retirement acceleration. That's your kid's college fund. That's freedom. And here's the crazy part. That $25,000 in expenses, you were spending it anyway. You just weren't categorizing it. You weren't documenting it. So the IRS assumed it was personal. And you paid taxes on money that never stayed in your account. Most self-employed people operate in this bizarre middle zone. They know they should be tracking expenses, but they don't know how. They're scared of the IRS, so they underclaim. They leave money on the table. and they overpay year after year after year. It's a tax on ignorance, and it's completely avoidable. Now, this is just the foundation. Once you control your expense categorization, you unlock the next level: entity structuring, choosing between sole proprietor, LLC, S Corp, Corp, based on your income and growth trajectory, asset stacking, buying equipment and vehicles through your business for maximum depreciation benefits, advanced write-offs most people never touch, retirement vehicles like Solo, 401ks, and SEP IRAs that reduce your taxes while building wealth, equipment depreciation strategies that let you write off purchases immediately instead of over years, vehicle deductions that go way beyond simple mileage. I'm talking actual vehicle expenses, depreciation, lease payments, insurance, registration, even health insurance. If you're self-employed and paying for your own health insurance, that's often fully deductible. But most people don't claim it because they don't know where it goes on the return. It's not an itemized deduction, it's an adjustment to income. Completely different line, completely missed by most people. I'm not going to teach all of that today, but if you're serious about keeping your money, those strategies exist, and they're sitting right behind this one. The moment you master expense tracking and documentation, you're ready for the advanced playbook, and that's where the real money lives. But you can't skip steps. You can't jump straight to S Corp election if you don't even know what you spent last month on your business. You can't optimize what you don't measure, and you can't defend what you don't document. Here's the truth. You don't need more income. You need better control. Most self-employed people are making decent money. They're just bleeding it to taxes because they're thinking like employees. The moment you start thinking like a business owner, tracking expenses, categorizing properly, documenting everything, you take back control. The IRS isn't your enemy. Ignorance is, sloppy systems are, guessing is, fear is. Every single one of those things costs you thousands of dollars a year, and it's completely fixable. Let me tell you what changes when you fix this. First, your tax bill drops, obviously. But second, your stress drops because you're not guessing anymore. You're not wondering if you're doing it right. You have a system. You have documentation. You have confidence. Third, your CPA actually starts working for you instead of just filing your return. Because when you show up organized, they can give you strategy instead of damage control. They can tell you what to do next year instead of explaining what you missed last year. And fourth, you start seeing your business differently. You stop thinking like someone who makes money and pays taxes. You start thinking like someone who engineers cash flow. And that shift changes everything. I've seen people go from paying 40% of their income in taxes to paying 20%. Same business, same revenue, different structure, different documentation, different outcome. That's not tax evasion, that's tax strategy, and it's completely legal. The wealthy have been doing this forever. They don't pay more in taxes because they're generous. They pay less because they have systems, they have documentation. They have CPAs and tax strategists who know how to structure everything legally, and now you know the foundation of how they do it. You don't need to be rich to use these strategies. You just need to be organized. You need to track, you need to document, and you need to stop thinking like an employee. So, here's what you do next. Step 1, open a spreadsheet or download an expense tracking app. I don't care which one, just pick something. Step 2, start tracking every single business expense starting today. Every coffee meeting, every software subscription, every mile driven, every supply purchased, everything. Step 3, calculate your business use percentage for your home. Measure your workspace. Divide it by your total home square footage. Write it down. Step 4, start logging. Monthly is fine. Just note what you used your space for. Calls, admin, storage, prep, whatever. Step 5, take photos of your workspace, your equipment, your vehicle, if you use it for business. Create a visual record. Step 6, organize receipts. Digital is fine. Take pictures. Save PDFs. Just keep them categorized by month. And step 7, talk to a CPA who specializes in self-employed tax strategy. Not just someone who files returns, someone who actually helps you plan. They exist, find one. If you do those 7 things, you will save thousands of dollars next year. Guaranteed. Not maybe, not possibly. You will save money because you'll be claiming what you're legally entitled to claim, and you'll have the documentation to back it up. Now, if you've been self-employed for a while and you've never done this, don't panic. You're not alone. Most people haven't. But you can fix it. Go back through your bank statements, rebuild your expense trail, amend your returns if it makes sense, and start fresh this year with a real system. The money you've lost is gone, but the money you'll save starts now, and that's what matters. If you're self-employed and serious about keeping your money, subscribe, because this is just the beginning. I'm going to keep breaking down exactly how self-employed people build wealth, how they structure income, how they minimize taxes legally, how they invest smarter, how they retire earlier. This isn't theory. This is the actual playbook. And if you're tired of watching your income disappear to taxes while employees with benefits get all the breaks, you're in the right place. Hit subscribe, turn on notifications, and let's build this together. Comment below what you do for a living. Tell me how long you've been self-employed. Let me know if your CPA ever explained any of this to you. And tell me what you want me to cover next. Because I'm making this content for you. And the more I know about what you need, the better I can help. Alright, that's it for today. You now know more about self-employed tax strategy than 90% of freelancers out there. You know how to document, you know how to categorize, you know how to turn everyday expenses into legitimate deductions. And you know the difference between sloppy and smart. Now go use it. Start tracking today. Build your system. Take back control of your money because you've earned it and you deserve to keep it. I'll see you in the next one.